What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price is today, and where price is likely to head tomorrow and into the rest of the week. So let's go ahead and jump into it. Don't forget, in the description below, there's some different links. It'd be really helpful if you guys could check that out, read them, click on any of them, especially the link to Traders Helping Traders Discord, where I'm hanging out during market hours, and we're doing live options callouts inside the premium and inside the free section of that Discord. So let's go ahead and take a look at Tesla's chart today. We had a doji candle. Very small. We had a lot of price action on the wicks, but we ultimately closed near the same price as we opened. We did get a gap open, and we saw, again, a little bit of push down. We saw a little bit of push up, but ultimately ending very close to opening price. Now, what I want you to recognize with what happened today, right, is that yesterday in the video we talked about consolidation, right? Accumulation happening right here in this Monday candle using quarterly theory. Okay, we accumulate, we consolidate, okay, we manipulate. Look at that move. We caught it. We broke above the previous day high, right? We took it. We came back down. We started to see the sell-off into the end of the day. So is that the manipulation move, right? We manipulate, we redistribute to the downside, continuing this move here. Totally possible. We could see Wednesday trading down, Thursday trading down, maybe see some kind of reversal. I have been looking at this thinking, oh, well, maybe we stay kind of in this range, maybe even within Monday's range throughout the whole week. So even if we catch some distribution, right, maybe trade back up, maybe it's just a wick that pulls down into this daily fair value gap that we got the eye, we're watching for price to come down here. So if we start coming down, do we see just a wick and then back up into this? Monday was a pretty big range day, which was some nice price action. There's some good trades in there. But I am really looking at this because it would be a perfect move for market makers and big money to keep this consolidated, keep us guessing, is the move going higher or lower. Right, there's a lot on the table here at the psychological level of 200, dropping below, right, into the 180s, 190s. There's a lot on the table there. So does it consolidate maybe for a week, maybe for, maybe even for 2 weeks, just kind of saying maybe in 2 weeks it stays kind of within this range here. Does not even give us a clear direction. Is price going up? Is price going down? And then we'll be waiting and watching for some news drivers. Maybe FOMC is the market driver. Maybe some other data that comes out as the market driver that's going to punch us up or punch us down. But I do think that we might just find ourselves in this week staying within this range. But we'll have to see. Maybe that doesn't happen. Maybe tomorrow we just rip up. We got these levels we're watching. We took one of the levels. We did a live call out today in the Discord. That was a Tesla call. Wrote it up here. Target was this level here, and you'll see that on a shorter time frame chart where that came from. But you can see price hit it with a wick. The next level up, we didn't quite get there, but that's what we were looking for, was 223 and some change. And then we're looking at this wick to wick gap here. And just didn't have enough juice to go up there. Don't think we're going to get there tomorrow, but you never know. I mean, RSI is starting to push up, but we're going to run into this control line on the RSI. Maybe that's all it takes to push us back down. We'll see. But if we can break over that, we could see a rally again up to the 230, 240 range. That wouldn't be out of the question. If you were looking at this wave here, very aggressive, limited structure, the structure rests up here. Right, so when we do see a rally, we will rally into this gap, and we will probably rally up into this structure where we find some support. There's also a daily point of control volume node that we've been talking about that dates back all the way to July. And so all of this price, we got a daily point of control that also happens to be where we saw some consolidation. We saw consolidation over here. Right, we saw rejections and then rejections as support, rejections as resistance. So this is a very key level of 253 and the psychological level of 250. But if we do start rallying and we do start to see some momentum kick in here, we're likely going to come close this gap between the wicks. There's a fair value gap here. There's just a straight daily gap on price. But we're going to trade up into this, and we're going to probably push up to check out that volume node and see if it wants to offer resistance again or if it wants to be support. Wouldn't be surprised to see if we do rally up, we hit that, we see some kind of rejection out of the gate, whether that rejection takes us to lower lows or that rejection is just minor and then we run through it. We do have that 15-minute unbalanced price range much higher up here. So higher targets, lots of targets, because that's where we came from. Downside targets, though, is the same. We got the weekly opening range on Monday down at 202 and some change. We have the fair value gap that starts at 198. We got the consequent encroachment of that fair value gap, 192. And then we have the closing of that fair value gap, 187. So we're watching this very carefully. And we do have this minor fair value gap in here that came on a lower time frame chart. So that is going to act as a magnet, right? Again, consolidation, manipulation. Are we looking for distribution down into this fair value gap? Maybe take it out. Maybe take the weekly low out. Maybe hit the bullish fair value gap down here. Draw on some liquidity. Maybe bounce back up and then close in this range from the week open range. Okay, so let's drop down into the, well, before we do that, let's drop the moving averages on the chart so we can go ahead and take a look at that. So again, we're trading above the 200. This 200 is going to act as support, unless we tear through it tomorrow. We might test it again, and maybe we just, pull higher from there. We haven't been able to break down through it because the 200 is a very strong support or resistance. There is a possibility that this continues to act as support while we come back up and test some of these falling moving averages. So that would kind of negate the, manipulation distribution to the downside theory, because then we would pull through the 200 and we'd probably see these moving averages start to aggressively come back down. But again, it could be also a fake out, manipulation distribution, come down, pop right back up, right? And then maybe the following week we pop back up above the 200. So it would be a really, good look for a bear trap if we broke down through it, then kind of rallied back up to it, and maybe up through it. People would think, we gave up the 200 period on the daily, it's bearish, but that's not always the case, right? So these moving averages can lie. They can be confluence, but they can also be areas where you think something's happening and then, it doesn't. So if we broke down through this, like if you don't know fair value gap, you don't know smart money concepts, you would not have any of this on here. So you would break through it. You'd say, we're bearish, maybe looking for it to just keep falling. You take positions. You wouldn't know that this was here for liquidity, where we might see a rally off that point. Right, so we're using our moving averages, but it doesn't necessarily, it's not the end all be all to technical analysis, right? We mix some of traditional, like the RSI and the moving averages, with smart money concepts as well. So let's go ahead and drop into the 4-hour chart. 4-hour chart, again, we're seeing that daily wick that we took on the 4-hour. It's a candle body open. We took that, just a little bit of liquidity that was in that wick on the daily chart. And we had basically equal close candles here. New York open, New York close, basically the same exact price, leaving that daily doji. Again, you get a better look at this, Monday opening range. It was in that first 1-hour candle. Then we saw, just some consolidation into that second candle. Again, the gap up, right? We traded up, we traded down, we consolidated right in the middle, more consolidation here. But that wick could totally be manipulation. We're looking for highs or lows of the week to be set on Tuesdays or Wednesdays. So it still does leave tomorrow to potentially rally up higher and then maybe have a reversal. But typically Tuesdays is a manipulation day, where Wednesday ends up being a move in the opposite direction, and then Thursday can be a reversal or a continuation. So again, I'm kind of thinking we stay inside this range. So even if we do get downside distribution, right, Thursday potentially reversal, Friday remaining in this range, or maybe Friday makes a move in the direction. So we'll be watching those things. As far as the moving averages go, the RSI goes, we're still oversold on the RSI. It is pointing back down, so it could dip deeper if we go into tomorrow and we head to the downside. We have a dropping 20 period, dropping 50 period, dropping VWAP. So at some point in time, we're going to come back and intercept those, at least test them, and then potentially sell down on them. But on the 4-hour chart, that doesn't look like it would happen maybe Thursday, Friday, if it did this week. But if we started selling down, we might not see that test of these moving averages till the following week. So if we look at the 1-hour chart, 1-hour chart, again, starts to break down those candles a little bit better. You can see we are above the 20 period. We are above VWAP. Definitely the 20 period could help drive us up higher. So I'm really closely going to be watching, are we gap open, are we gap close, where's the opening 15-minute range momentum, and then trading, looking to trade that on the short-term time frames. because we do start to see some different looks, right? With this 20 period flattening out, VWAP flattening out, trading above it, that totally could offer support to run us into the 50 period, right? That would be looking to take this liquidity in the 1 hour candles, which could happen tomorrow. It could happen Wednesday. But we'd be looking to run a test on the 50 period. On the 1 hour time frame, if we did run up quickly, we would then be looking to come back down as we saw the 20 period curl up. We'd be looking for price to come back. And I'll draw it out with a path tool. So say we do start trading up tomorrow because the 20 and even if we did, I bet we ran a quick test on the 20 again, right? And then maybe we see a rapid incline to take some of these wicks, right? Here's where these wicks came from. They were on 1 hour charts. Wick there, wick there. Okay, those were ones I was watching. They were up close candles and they were wicks. And so those were my two price targets. We hit one, we didn't quite hit the other. We had the nice call out. I closed at a 55%, roughly 55%. I know there's some traders that ran it a little bit longer, got a little more money out of it, but it was a really nice trade early on in the day. But even if we open tomorrow, I bet we run a quick test on the 20, see if it holds, and then potentially rally up throughout the day, maybe testing on Wednesday or Thursday, the 50 period, right? And then what I would expect is a rejection from there, and it would come back down and intercept the 20 period that would start curling up. Okay, so if we do get a rapid rally on a 1 hour chart, Wednesday or Thursday, we're looking at that 50 period moving average to see if there's a rejection. Because oftentimes what will happen is 20 will curl up, we'll test it one more time, we'll then run through the 50 period while the 20 starts to act as support. The 50 period will start to curve up, and we'll run a test on the 200 period. And where's the 200 period on the 1 hour chart? Well, it's right around the daily volume node point of control, and by the time we get there, it should be down here around our gap that we were talking about on the daily chart, the wick to wick gap, right? And we also have just a straight up, candle body to candle body gap as well on this time frame. So again, if we do that, testing the 20, running a test on the 50, back testing the 20, ripping through, headed to the 200, and this is on the 1 hour chart. So this is going to take, a week, maybe even longer, maybe a week and a half for that whole thing to play out, in my opinion. Okay, if we drop down to the 15-minute chart, right, we have some other things that would, possibly support that same move, right? We have price right about the 20, above the 50, testing VWAP, right? We kind of bounced over, tested it, came back through, tested it, right? We're flirting with the 15-minute VWAP. RSI doesn't give us a very clear direction, but it's barely pointed up. So if we were, maybe we gap down below these moving averages, a little bit of a fake out. Maybe it would come down here, test this liquidity that's in these equal lows and these tweezer candles that are equals. So do we do that? Do we gap down, maybe take that liquidity? Maybe we gap down a little further and we take that liquidity, right? So I'm looking for a potential for this to happen early tomorrow. And then these are 15-minute candles, see a run up, and look what we got here on the 15-minute chart. We got the declining 200 period, right about that same point that we'd be talking about testing the 50 period moving average, right? So maybe it does happen tomorrow, tomorrow or Thursday, and see if we trade up, tap that 200 period, see if we come back down, test some kind of, maybe there's a fair value gap in there that gets laid, maybe there's another liquidity target, a previous low, something like that. But we'll be watching for that rejection first, and then see if we can drive up through it. And maybe what we see is this move happens rapidly out of the gate, right? And if that did happen rapidly, we'd be looking for it to come back down and test the moving averages that were coming up, and then again potentially run through this 200 period, and then we'd start targeting our gap levels and our daily volume point of control, right? Again, it could happen faster than a week and a half. It might take a little bit longer. It just depends if it wants to chop and consolidate, or if we find some momentum that'll move us in a direction. Right, still looking at the potential that this was a manipulation, because then we kind of traded down and consolidated. If this was the manipulation, we could just straight up, maybe we gap up, do a quick run, and then just boom, dump down. Definitely a possibility as well. Again, that would be the 50 period. That would be around the 50 period test. It would take the liquidity in these levels. It would test that gap, see if it wants to offer resistance, and then bam, we'd be dumping down to previous day low, down in the fair value gap. So again, we're trying to be non-biased. We're trying to be open to a move in either direction, and that's why we're watching 15 minute, 1 minute when we're day trading, just to see where's price going. We're reading price structure because here on today we had over here we had a change of character. We had a break of structure, a bullish break of structure. So if we did get back up to this high in this wick here, that'd be another break of structure, and that would be a bullish move. So we'll be watching to see if that happens. And then if we drop down again into the 5-minute chart, look at the moving averages, you can see a little bit closer of what price action happened today. We caught that nice move up, right? Hit this top, took that liquidity level, immediate next 5-minute candle sold back down through the level, and then it was just sell down from there. There wasn't a clear indication on any of this move that this was, as far as smart money concepts go, that there was a short in there. I know that some people took the short right on the exit of the calls, and that was a great trade. But I didn't see anything in here that led me to believe that it was going to be a drop like we got. I guess you could look at the moving average test that we came back down. We tested the 200. We traded back up, but nothing in here screamed that it was an awesome trade. I don't see any fair. I see a little fair value gap here. I guess you could have looked at. You also could have looked at this change of character that occurred right there. Could have said I'm going to wait for a quick bounce after the change of character. Right? If you're using your moving averages, you see us come back and test VWAP. That could have been a good entry. What I'm looking for is a smart money reversals, which I did not see. So if we're looking at high to low here, before we get a bounce, right? I was looking for a move back up here to a fib level. We did not get that move. It was just more or less a straight sell down. So nothing I liked. I didn't take that entry. What I did do is I took a trade later in the day on this move here. It was a short, little bounce here. I took a short, went a little bit in profit. It was a call out. I ended up closing mine for break even. Left the option open to swing, if people wanted to. But I didn't like that price did not deliver where I wanted it to deliver rapidly. I was looking for these levels down here. I was looking for potentially a break of this low right here, right? And price started to come down. We did not get there. There's also a little fair value gap on the 5-minute chart. I'll show you on the 1-minute chart as well. There was some things I was looking for as far as target. It just didn't hit it. So again, here I can show you a little bit closer of what I was looking at. So when I didn't catch the perfect entry, but what I was looking at is this move here. I was in a meeting at work. I didn't catch the fib level. I caught it down here. But what I saw is down here, I saw this fair value gap, and then I saw what becomes an inverted fair value gap. For those of you that don't know what inverted fair value gaps are, they are fair value gaps that are laid one way, and then they end up also being a fair value gap in the other direction. So you can see there's a fair value gap here, there's a fair value gap here, so that becomes an inverted, more or less an inverted fair value gap. You could also say this one down here. Actually, that might have been the one I took. This was the one I was looking at because it has the fair value gap on both sides at basically the same levels. Yeah, so that was the one I was looking at. I was looking for price to deliver through the fib levels, right? And so when we take our optimal trade entries, which it didn't quite hit, it nearly hit it by a couple pennies, 47 to 49, missed it by 2 pennies, 3 pennies, but you're looking for that, swing high to swing low, and then you're looking for that fib retracement. Then you're looking for price to deliver to the 0, to the negative 0.27, to the negative 0.62, and then to the 1 for symmetrical swing. Well, when we were delivering down here, we were getting nice displacement candles to the downside, right? But then we caught a bounce up, and we caught some equal lows that just got swiped and then ran up, and then we started trading up from there. What I wanted to see was price continue to displace rapidly to the downside all the way into this fair value gap, and that's where I would have closed my puts that I had called out. Now, when we came back up towards break even, again, I got in around here. When we came up in this candle, I closed out at break even. I didn't want to take the risk anymore. Wasn't willing to swing the trade, but that's why I exited, because price did not continue in this move to rapidly move to the target that I had to close the trade. And if you look at the moving averages on the 1 minute chart, we are trapped between some moving averages, and we got VWAP to the upside. So potential that we could run a test, but VWAP, the way VWAP works, you can see on a giant gap open is you got VWAP down here, right, and then we gap and VWAP rips. So if we gap down tomorrow, VWAP will just go and dump down. So less important that this VWAP is up here. More important that we're stuck between moving averages. There's not a really clear indication. 20 period looks like it's starting to roll over. 200 period is more or less going flat. 50 period is driving up a little bit, and so that could run us up. The gap up, gap down, open, or opening flat is going to probably help determine the initial move. One last thing I want to look at, and I'll drop back into the 15-minute chart, is and this is something I've talked about before, but looking at opening range and using opening range for potential trades. So let's go ahead and drop some of these off. What I want you to see is our opening 15-minute range. Okay, and I use wicks on my range. I know some people don't, but I do. And so you can see here, if you didn't take this initial trade in this candle here, where we were jumping in looking for that manipulation move to the upside, that's why we jumped in so quick, because we saw that Monday range. We were looking for manipulation because of the gap up. We were looking for manipulation to the upside, and so caught an early entry, caught a nice exit. But if you didn't catch that and you're just looking at the opening range, you got your 15-minute candle here, and then you can drop into the 1 minute or you can use the 5 minute. That's your call as far as breaking that range. But if we look, we can see there was a nice, and this is what we want to see. We want to see a nice breakout candle. Okay, so this was our last 1 minute candle here. We hit it with a wick, but that was just a wick on one candle. We want to see a candle close through that. Look, we wick over the next 15 minutes. And then 2 minutes till the end of the first 30 minutes of trading, we break out. Nice breakout candle. So you could have jumped here, 220, rode it up, 221 or 222, right? And you could have caught still a nice little scalp in there. And that breakout candle is the confirmation that we're looking for. But you can also see that there's a fair value gap here. So price is going to want to trade back down into, and potentially through, but at least back down into. So when you see this move here, and you look at RSI, we got RSI divergence happening. That might have been a good option. We got a candle, we got a bearish, not engulfing, but a nice bearish candle off the top, rejection candle, right? We trade into the fair value gap. We know that that's magnetic. And then once we have this big displacement candle through that fair value gap, that's pretty good chance we're going to come back and test liquidity, or even test the range, the 15-minute open range. And so you can see giant displacement candle through the fair value gap, back below the range. If you target a previous low, look at that, was a nice trade as well. Again, I didn't take it, but if you were watching the 1 minute chart, you have a change of character here. Trade back up into a fair value gap here. That could be a great entry, right? Or you can wait for the confirmation where we traded through the fair value gap, take the short, targeting the previous low. Now let's slap up, just for funsies, let's slap up our silver bullet time macro. You can see it happened during the silver bullet. The setup was there. Let's go ahead and look at our optimal fib entry 2 and see if that gave us an indicator. Only traded back up to the 50, so that wouldn't have been necessarily a smart money fib retracement. But you have this, again, I'll chart it out here for you. But you have this wick here, this down wick. Okay, it's kind of out of place. You have a change of character, and I'll just draw that through. Okay, so we come down, we change character right here. We trade back up through it. Also, fair value gap right here. Okay, trade back into it. We know there's liquidity there. We know it's fair value on price. We also trade, it's also back up through the change of character. Okay, displacement candles, back up to the fair value gap. We traded a little bit through. Technically, it would be closed, but we traded into it, so that's what's important. Good short entry there. And if you were using your risk management and you were looking at previous low, okay, your previous high, it's 3.94, so basically a 4-to-1 reward risk ratio. Okay, even if you were going to target this low here instead, you would just slightly adjust it to be a 2. You can see price never even came close to running back and taking your stop loss. You would have got a nice 2-to-1 here, which was almost a $4 move on the stock. If you would have targeted the range low and kept your high right here, or actually you'd probably set it just right above the high here. Still got, 3.5 reward risk ratio. You would have caught a much bigger move, a $5.76 move on that one. So nice trade either way. Using smart money concepts again, looking for price to come back down through it, trading up into the fair value gap after the change of character, and then we just got displacement candles, a lot of nice bearish activity there. Ultimately, we took the range low, we overshot it by a little bit, we gave that inverted fair value gap, right? And then we traded up into New York PM session, where again, inside a silver bullet time frame macro, we got our optimal trade entry, and we got our minimum objective target, previous low, right? And we got a little bit more if you took that. So, know how to use your silver bullet time frame macros, know how to use your fair value gaps, know how to use your optimal trade entry fib levels. All of those things are going to be incredibly useful. If you're using the Smart Money Indicators concept tool from Lux Algo, it's not going to always give you everything that you want or need. Sometimes things paint late, sometimes fair value gaps get taken off that should remain there so that you can still see where they are. So it's really helpful if you can learn to draw things out on your chart manually. That's how I know how to do it. You can see I don't have any of my Lux Algo indicator on right now as I'm showing you these different things. And when I trade for myself and I'm not taking screenshots and pictures for other people to try to understand what I'm talking about, I'm trading without those indicators on. So really helpful if you can really spend the time to learn. If you're a Smart Money Concepts trader, learn how to manually chart. You're going to find yourself a much better trader if you know exactly what you're doing. So I hope this has been helpful, informative. Again, I thank you guys for all the support. There's some links in the description below. It'd be really helpful if you checked out the merch shop. We got a bunch of different cool merchandise, t-shirts, hoodies, blankets, all kinds of stuff. Check out my Twitter. I post different things there than I share in the Discord. Check me out on Discord during market trading hours. I appreciate all the love and support. Don't forget to smash a like, subscribe, and tell all your friends where you're getting all the hottest call outs for Tesla options. Thanks, guys, and I'll see you on the next one.